All right, we're back with the Mortgage Hotline. You heard it here. I want to hear from you. We were listening to Greg a little bit earlier, and he had some questions about prepayment penalties. It's definitely off topic for what I'm talking about today. But if you have any questions, concerns about the mortgage or real estate market, give me a call here. You can reach me at 760-416-8475. I really want to hear from you guys. I mean, this is the most important thing. I want to help educate and get you guys the direct answers that you need, and be able to have a forum to do that. If you are big on Twitter, you can also follow us on the show at the hashtag, that'd be like the #, Mortgage Hotline. And so I want to hear from you guys. Let's start a community on Twitter, and if you guys have any questions about it, you can also find me or follow me on Twitter at Mortgage Hotline, and also Sean LaRue. So we were talking a little bit about creative financing, my Mortgage 101 seminar, as well as I kind of want to dive into a little bit about FHA financing in 2009 and why the FHA financing program, mortgage program, is going to be such a staple. I was talking with one of the owners of Franklin Loan Center the other day, and he said that he actually thinks that the mortgage market might actually turn to a government insurance program, if you will, because that's kind of what FHA is right now. It's a government-insured program for loans through the Federal Housing Administration, and that's what FHA stands for, the Federal Housing Administration. And it's kind of interesting to see maybe where Freddie and Fannie will go with their financing. So FHA financing, and I had a question of this from a client yesterday, actually, who said that he could get a primary residence or an FHA loan. He owns a property in LA, but he wants to buy a property here, and he was told that he could get an FHA loan. Now, FHA loans are only for primary residences. And so I want you to keep that in mind. The occupancy has to make sense. If you have another property or if you live out of the area, it all has to make sense for why this new property is going to be your primary residence. Okay, so the FHA allows for a low down payment. Most of you know that as of January 1st of this year, the down payment requirement went to 3.5%. That's up from 3%. And right now, the minimum FICO score is a 620. So if you have good credit and you have a better than a 620 FICO score, you can qualify. Definitely want to use this program because there are liberal qualifying debt-to-income ratios, and that's what one of the banks use are the debt-to-income ratios. And you can get an FHA loan right now between 5 and 5.5%, depending on the points and things that you're going to pay. Most of these programs are 30-year fixed, so you know that your payment's not going to change for the mortgage. Part of it's going to be principal and interest. And you can actually do properties on leased land as well. If you are buying a property in Palm Springs that's on leased land, I know that's definitely a large concern about financing for leased land in Palm Springs. It's a great opportunity to take advantage of that. And one of my videos on YouTube that I was talking about was also you need 2 years seasoning for bankruptcies. But if you have good reestablished credit after a bankruptcy, you can actually qualify for a loan. So check out that video. As well as if you had a foreclosure or a short sale, you can actually buy a house right now. So if you had a short sale or foreclosure in the past, if it's been 3 years since it's been discharged, you can actually qualify for a loan. And I did a short video on this a couple of weeks back when I was really talking about it. I was thinking to myself, you know, it's 2009 right now. It's September of 2009. And when did some of this the short selling and foreclosure start? It really started sometime in 2006, end of 2005. So if you had a short sale or foreclosure on your credit anytime in 2006, you know, you might actually start be able to qualify for buying. And I know I have a couple of friends that did that. So I want to go to the phones right now. We've got a couple of people on the line here. First, let's listen to, let's see what Donovan from Palm Desert has to say.
Hello.
Hi there.
How are you doing?
I'm good. How are you, Donovan?
Oh, not bad.
Good. Welcome to the Mortgage Hotline.
Thank you.
Good. What's going on?
Oh, well, what I'd like to do is I have a house that I'm renting out, and I've got my taxes and insurance unimpounded, so I pay them twice a year, or my insurance once a year. I've got a renter in it, so I'm losing about $260 a month.
Okay.
And I've got another house that I got a great deal on. And the one that I'm renting, I owe $295 on it. It's worth about $215. And I heard you say, coming out with programs where you could buy and then walk away. I was wondering if they're going to have a program, or if they do, to where I could get another house, walk away from that one, and then be able to get another house at 3.5% down.
Well, the buy-in bill is actually something that they're cautioning against, and they may not approve you if the underwriter has a feeling that you might buy and bail. So if you have several properties where you're upside down, or that it might look like you're credit risk, there's a possibility that that they might not approve your loan. You're renting out a property now. Are you living in another property?
Yep.
Okay, and you want to buy another one. One of the things that an underwriter is looking for to help qualify you is, what is the situation where you want to move up into a new property, or why do you need to buy another property and live in that one opposed to stay in your current property? And so there definitely needs to be some kind of a motivation there, and it's got to be evident, like moving up in value, or getting more rooms for kids if you have a growing family, or if you're older and you're downsizing. There's different stages in life for why you need to do that, and sometimes it makes sense more than others. But if they get the hint that you might be buying another property and walking away from an investment, if you qualify, you might be able to get away from it. But right now, if you don't have like 30% of equity in the property in your primary residence, the house that you're living in right now, we would actually have to count the total mortgage payment against you for your primary residence, and we wouldn't be able to give you rental income on that. So if you're about even on the house that you currently live in, then you would have to qualify based off of your debt to income ratios without counting any rent.
Right.
So,
and I think I can. I've talked to a couple loan consultants, but the thing is the down payment. You got to come in with 10% down. And the thing that's really irritates me is I'm in a 10-year interest-only loan now, so I've got a renter in, and I've got about 2.5 years left on it, and then it turns into a 20-year loan. So my payment's going to go from $1,387 to about $2,100 7.5 years from now, and I'm not paying anything down on it. I'd love to be able to pay some principal on this, but the way things are working right now, it's working.
Definitely.
So.
Are you in a position where you can write my number down?
Yep.
Okay. My number's 760.
Okay.
835.
Okay.
5663. 835-5663. I'll talk to you off the air about a couple of different options. One of the great things about the Mortgage Hotline is that we're really here to help educate you and try to figure out how we can help. And I've got a couple of different ways of doing that. So let's get you together with Charlie, our production manager. He'll get your information so I can give you a call after the show, and we'll see what we can put together.
Thank you.
Thank you very much, Donovan, for calling in. That's Donovan from Palm Desert, and I think we also have Rick from La Quinta. Rick, are you there? Possibly 1 second. No, Rick is no longer there. Rick, if we lost you, I'm sorry about that, but definitely give us a call back. Love to hear from you guys.